Today, we're diving into this really wild mix of ancient tradition and, well, super modern finance. We're going to break down how Lunar New Year, a huge cultural holiday, actually becomes a surprisingly reliable trigger for a very specific kind of frenzy in the crypto markets.
Sounds a little strange, right? But honestly, the data shows a powerful link. Every single year, while millions of people are celebrating, this unique and super volatile crypto trading season just kicks off. So let's peel back the curtain and see what's really going on. So the key thing here is that this isn't some one-off fluke. Nope. It's a consistent pattern year after year. As traders get back from the holidays, new money starts flowing in, the whole vibe of the market shifts, and we see this huge spike in high-risk, high-reward trading. All right, first up, let's talk about why this holiday period is such a massive catalyst for the market. What makes it tick? What we see happen during this time is super specific. It's not just some general market buzz. We're talking rising trading volume, both on exchanges and right on the blockchain itself. Money starts moving lightning fast into what we call high beta assets, which is just a fancy way of saying the riskier, more volatile stuff. And this is the big one. It creates these short, intense windows where a really good story can send prices to the moon. And all of that leads us straight to the star of the show, meme coins. Let's dig into the specific cultural stories that make them just so explosive during this time of year. This right here is the secret sauce. See, it's not just any old meme coin that pumps. The ones that really catch fire are the ones with themes that just click with the holiday. We're talking zodiac animals, symbols for good luck and wealth. These stories are timely, they're relatable, and they just spread like wildfire through the crypto world. And this whole cultural connection, it completely changes how traders think. Suddenly, people are way more willing to take on risk. They aren't looking to hodl for years. No, they're in it for the quick flip. All the attention shifts away from long-term value and zooms in on short-term momentum and just how good the coin's story is right now. But, and this is a huge but, just chasing the hype is not going to cut it. In a market moving this fast, following the buzz on social media can be a total recipe for disaster. I mean, think about it. For every single coin that moons, you've got dozens that just pop up and then fizzle out almost immediately. The amount of noise is just insane. And figuring out what's real and what's just smoke and mirrors, well, that's the real challenge. And this really gets to the heart of the problem. On one side, you've got all the social hype, the rumors, the stuff you can't really prove. But on the other side, you have the on-chain reality, the hard data, the actual transactions you can see, the real money flowing into a project. That's where you find out if the momentum is for real. And that is exactly why experienced traders follow the data. They might see the hype online, sure, but they always turn to the blockchain to, the saying, trust but verify. There's actually a name for what they do. It's called on-chain confirmation. And it's a super powerful discipline to get into. The idea is simple. Before you put any serious money down, you look for cold, hard evidence on the blockchain that backs up the story everyone's telling on social media. So what are they actually looking for? Well, first are experienced, high-activity wallets, the smart money, quietly buying up the token. That's a huge vote of confidence. Second is new money being added to the project, and are the early investors actually holding on instead of just dumping their bags? And third, does what's happening on the blockchain actually match the level of hype you're seeing online? When all three of those line up, okay, now you might be onto something real. Okay, so how do you even do all this? What kind of tools do you need? I mean, you can't just stare at a wall of transaction data and hope to spot these patterns, right? You need the right setup. Well, the modern trader's toolkit really has to pull a few key things together. You need real-time wallet tracking to see what the big players are doing. You need tools that can analyze liquidity on decentralized exchanges. You got to monitor all the social signals. And finally, you need a way to trade fast across different platforms to get the best price. Okay, let's tie this all together. If you want to be successful during this crazy season, it really just boils down to three things: having the right data, having the discipline to use it, and being fast. There's a quote from our source material that just absolutely nails this. It's not about who can guess the best. It's about who gets the clearest signals from the data and can act on them the fastest. That's the difference between making money and getting wrecked. So here is the biggest takeaway. Trading these seasonal narratives isn't about looking into a crystal ball.
It's all about building a system to react intelligently. It's about letting the on-chain data confirm the story before you jump in. It's about being disciplined instead of just gambling.
So, that leaves us with one last question for you. In this crazy market where culture, psychology, and technology all collide, the line between noise and real opportunity is thinner than ever. So, are you going to chase the hype, or are you going to trade with the data?